Hey everybody, my name's Jake Invest. Which one is a better deal? SoFi versus Upstart. Let's take a look at these companies and see which one I should invest in. Or honestly, if I truly wanted to, I could invest in both of them because they're competitors. So if you would have been like, oh, I'd rather invest in Coke than Pepsi, and you're like, you know what, I'm gonna go with Coke because screw Pepsi. But if you would have invested in both of them, you would have made a bunch of money on both companies. But are these companies worth investing in? Like and subscribe. SoFi has a $4.73 billion market cap, a revenue of 1.12 billion, which is a really high revenue, which is good to see. They have a net income of negative $416 million, which is not good to see. But it's okay because a lot of companies that start out, they don't make money, and it takes time for them to become profitable. But what you want to see is them getting closer to profitability over the years. They have about 800 million shares outstanding, and that is a lot of shares outstanding for a company like SoFi with only a $4 billion market cap. And the share price is only $5.91. It looks really cheap, right? But Upstart's $24, so it's more expensive than SoFi. No, that's not correct because Upstart has a market cap of 2 billion. So Upstart is actually cheaper than SoFi. I mean, SoFi could be a way better company, but Upstart has the $2 billion market cap, which is half the size of SoFi. If you were to buy Upstart and it went to $4 billion market cap, you would double your money pretty much. So they have a net income of 158 million, which is positive. Upstart has 84 million shares outstanding. And that is why the price is a lot higher than SoFi, because SoFi has way more shares outstanding. Because SoFi really diluted the shareholders a lot. It took away ownership of the company pretty much. And Upstart has a PE ratio of 17. The analysts say it's a hold. And SoFi, the analysts say it's a buy, and they don't have a PE ratio on SoFi because they're unprofitable. And the price target for Upstart's $39, and the price target for SoFi is $10. So that's about the median. At one point, SoFi, they had a market cap of $20 billion. Okay, so if SoFi went up to 20 billion again, it'd be worth about $20 to $30 a share. SoFi's financials, they had a revenue of $1 billion, and their net income was negative. And if you look here, it shows that their net income becomes negative every year, right? So they're negative, they're negative, they're negative, and then they're more negative. So they were doing good from 2018 to 2020, but in 2021, their net income tanked all the way down to negative 483 million. So it pretty much doubled in negativity. But that might be because their revenue got higher. They got more loans and they had to loan out more money, reinvest in the company. You know what I'm saying? There's a whole bunch of things that happen. So what we're going to do is we're going to look at their shares outstanding. When they started in 2021, I think they came on the market, they diluted their shareholders a lot. So they went from 116 million shares to 800 million shares. And that was with no stock split, which means that's how much they diluted the company. If you bought SoFi whenever they IPO'd, you lost a significant amount of that company. Let's say, theoretically, you had enough money to buy every single share of SoFi. So you bought 116 million shares right here. They diluted you to 853 million shares. So at first you owned the entire company. Now you only own 1/8 of the company. And they did that by screwing the shit out of you. So that's what bothers me about SoFi. They really can't afford to keep diluting the shares because the shares outstanding is so high that they're thinking about doing a reverse split. And I don't think that's a good thing. I think that's going to make people run away from the stock because right now the stock looks cheap. So it seems like it's a good deal. All they really need to do is just stop diluting the shares and then possibly buy back shares eventually whenever they become profitable. And then Upstart, you're going to look at their revenues. Their revenue increases every single year like magic. 2021 was 850 billion in revenue. Look at that growth. Damn, look at that growth right there. And then their net income, so they were negative in 2017 to 2019. And then in 2020, they became a positive net income company. And then in 2021, they made 135 million. Let's see quarterly. So they're constantly making money. Even in the last quarter, they made a profit, which is something you really, really want to see. If they don't keep making profits and they start going down, that's whenever you want to check out of the company. But this company, Upstart, seems like they're doing really, really good. But if you look down here, they did dilute the shareholders. They went from 74 million to about 84 million shares. So they barely diluted you on Upstart in comparison to SoFi. Okay, they still diluted the shit out of you on Upstart, and it really like pisses me off whenever companies dilute you. This is not a good thing. Like they really screw over the shareholders when they do this. But they have to do it sometimes. Like if they're like running low and they have to pay their employees, they're running low on money, they have to dilute the shareholders and they get more money somehow. I don't really know how that works, but what they do is screw you over. And then they can buy back shares, which is something that these new companies don't do. You know, it's running pretty well at Upstart. They're making money. Like they're actually making money. Like this is like the first company I've ever seen actually making money, and it's a hold. But SoFi, who's not making money, is a buy, which I don't really understand. Okay, so we can look here at the forecast, and it has a forecast of $72 at the high and a low of $15. So something's going on with Upstart that's causing the an analyst to put it down low for their projections. SoFi has a forecast of a high of 23, which is a 290% increase, and their low on SoFi is $7. So there's really only upside, and that's the 12-month forecast. So is it a good company? Yes, it is. Like I went on their website, they do your credit report, you can open up a bank account, you can take out as many loans as you want, or I don't know. I mean, it depends on your credit score, but if you have a decent credit score, yeah, you can get a bunch of loans and you can use them as your bank, and then you also get FDIC protection on your money, which is really good. But apparently they're not a bank, but they are a bank. I don't know, but when I Google is SoFi bank, it says not a bank, but you can use them as a bank. SoFi checking and savings. Better banking is here with 1.5% APY and no account fees. So yes, you get a 1.5 APY. Super good stuff going on with SoFi. Upstart. So on Upstart, you can pay off your credit cards, consolidate your debt, refinance my car, or something else. So you can just get loans here. I want to borrow $100,000. Oh, you can't borrow more than that. But like, yeah, so SoFi has a whole lot of other tools on there, and it looks more appealing to people. And I think you can like invest also on SoFi. So they want to be like the jack of all trades website. So Upstart's like strictly for loans. So what Upstart does is they focus primarily on loans, and they're going to master the loan process. You know, that's what they're focused on. Just like Nvidia is focused only on graphics cards, that is what they're best at, and they make the best graphics cards in the world. Upstart could be the next best loan service in the world. I don't know, but Upstart's doing really good. So, and SoFi's getting there too, because they have so many things to offer and a lot of people are looking into it. This is not financial advice, but if I were to invest in these two companies, I would hold them for years. And I think one day that these companies, they're going to be a lot bigger than what they are now. And then whenever SoFi becomes profitable, that is really going to make the stock shoot up. Now, will they last through the recessions? Will they last through all this economic disaster, the high interest rates? I don't know. These companies could go bankrupt and then lose everything, and then all the stockholders or shareholders lose everything. It's very possible. I mean, you just really have to think about what it's worth. You know, is these companies worth it to you? Do you believe in these companies? Do you believe in SoFi? Do you believe in Upstart? If you truly believe in it, you use their platform, you like their banking, you do everything on SoFi, you got a loan on SoFi, or you got a loan on Upstart, and you've researched a lot into it. Really think about it and make up your mind before I start investing into that company. That's what I'm going to do. I'm not telling you to do anything because I am just some guy on YouTube. I believe in investing in ETFs as well. I think that at least 50% of my portfolio should go into ETFs, like $100, $200, $300 every paycheck into ETFs or more, and then the rest I will put into speculative stocks like this, and then I'm gonna hold them for like 10 years. Everything I buy I'm gonna hold forever. I think Upstart and I think SoFi will be around in 10 years. Now, is their stock going to go up in 10 years? I don't know. But whenever this next bull market comes, I'm sure it's going to go up and then you can make a profit. If you were to invest in Amazon when it came out, you'd be up 122,000 from the beginning. At its high, you would be up at about 206,000%. You can make way more money investing in stocks, but for security and safety, ETFs, SoFi and Upstart, I think I agree with these analysts, but SoFi's sketchy with their freaking dilution, right? You got to watch out for that. And they're not profitable, so you got to think about that. And I think they're a good business. They got good business, but I don't know how they're going to be financially 10 years from now or 2 years from now. They could keep losing money for years, and they could even dilute you even more. But Upstart seems to have a good track record on becoming profitable. Now, I think that the stock market is going to keep crashing, so I'm probably going to wait and then dollar cost average into certain companies. I'm always going to dollar cost average into ETFs. Stocks, I'm a little more careful with. If you enjoyed this video, like and subscribe. Have a good night. SoFi, Upstart, awesome companies. And always do more research than whatever I do. If you want to see me look at other things, comment down below what you would like me to look at.